Time now for a look at the Zimbabwean markets with Anymore Taruvinga, who's an equities analyst over at Kingdom Financial Holdings. Anymore, thanks so much for joining us on the line this morning. Let's start off with a brief market update in terms of the kind of activity we're seeing on the Zimbabwean stock exchange right now. There seems to be quite a surge or run on the industrial side of things and then a pullback in terms of the mining sector.
Yes, definitely. Since the beginning of this month, we've seen the industrials coming back to life following the decline in August. But since the end of August, we've seen the industrials to date they've gone up about 7%. Yesterday we saw the market opening quite firm, which is a misnomer for a Monday, but it was up 1.13% to 241.37 points. Quite notably, the industrial index has reached quite a high figure since March. The last time we were in the 140s was sometime back in March. So quite a strong comeback from the industrial index. However, the mining index has been sluggish. I think for the past month up to now, we saw the faltering in gold prices as sort of hampered the growth that was happening in that index. Gold has been retreating since the cautionary to the effect that New Dawn Mining is going to acquire the minority interest in that counter. We have seen that index quite dragging.
Of course, there's more reason as well in that when you're looking at these mining companies operating now, you've got them suffering from, capital expenditure needing to be high in order to make new investments, and that with the dollarization that's come through into the country.
Yes, definitely. For the mining sector, there's still a lot of money that needs to be poured in. A lot of the machinery that is being used in that sector is quite outdated and breaking down frequently. Also, the power challenges in the country have been hampering mining production. You find that when the power is out, there's not much that can do in terms of alternative sources of energy because the coal side is not performing. The generators cannot power the plants. So there's still those challenges in the mining sector, and you find that for the few that are listed, actually you have Wange, which is struggling to raise funds because the major shareholder is government, and it's quite hamstrung at the moment. Then you've got Riozim, which has been struggling with their debt, so they're still in the red. They released their half-year results to June, and they're still in a loss position. The other one is Bindura, which almost got liquidated, but fortunately it was saved at the last minute when shareholders approved a rights issue. But still, we are still to see the impact of that rights issue because the money is yet to come in for Bindura.
Anymore, for those investing then in Zimbabwe, do you just miss out on the kind of commodity price rises that we've seen over the last couple of weeks? Because we do know that there's a lack of alternative in terms of getting into that commodity space simply because there aren't options like ETFs for direct exposure. So it's either these mining companies or nothing at all.
Yeah, that's the other challenge, that in terms of alternatives for investors, there's really a thin line. It's either you get in the equities or it's the money market. The direct exposure to commodities is still lagging behind. There was a commodity exchange that was mooted last year, but we are still to see whether it's going to operate. There hasn't been any to that effect. The commodity exchange was formulated and the structures were put in place, but it's up to now we haven't seen it operating. That exchange, we were hoping that it would expose investors to an alternative investment market in terms of people now having access to direct commodities. But as we speak, that market is too dysfunctional. So at the moment, it's either you get into equities or the money market. And for those who have got interest in metals, the mining index hasn't been performing. So it's really a catch-22 situation.